Go.
Thank you, Sean. Welcome, everyone. Welcome to our Wednesday. I call it our first open forum, which actually is it's really exciting. I'm looking forward to this, so we can share ideas. Some of your, again, our community to share some of the things you've been successful and not successful, and maybe by by working together, maybe we can hopefully go to the next level in some of the trading, and then also learn a lot because we've got such a knowledgeable group here with us. So um, I'm gonna actually stop talking much.
Hi. Hi, everyone.
Hi,
We
Ida.
almost got so late.
So we will.
I'm like, oh no, it's 4:05 already.
Well, this is a good time for everyone to share. So we'll, um, again, you're free. Anyone who wants to start with any subject, any questions, or again, sharing your experiences, that would be wonderful. And then you can ask each other a question because each one of you have your own strength. So this would be, again, this would be awesome to share those. So I'm going to be quiet and I'm going to actually listen. It will be great.
Can I be not the quiet one, Ramin?
Oh.
I just have one. I remember about 2 or 3 weeks ago, I'd mentioned what's the better when you're doing bull put spread or whatever spread, if it's in the money, out of the money, or whatever. And I decided to try it different ways. So I don't know the result yet until tomorrow on Friday.
Oh. So your question was, let's say you're bullish about something. You didn't know if you should do the credit like put spread or should you do debit call spread. And that's a very valid point. It's all about the risk and reward, the probability, and also volatility. So when the volatility is too high and collapsing, then you want to go with the credit. So it would be put spread might be one of the ways to do it. Put spread will be better. And if you're really looking at doing less volatile and then volatility is expanding, then the debit spread is better because now your call is, because of volatility, is going to move up, and you can, actually without even the movement in your stock, you still can collect. So this is the really simple answer for the verses, but also the probabilities are very much different. I'll just give you, hopefully we can maybe do another class on this. It's very interesting, the risk reward, whatever you risk with the exact same, combination. If you did the credit put spread, the credit that you received usually is the same amount as the debit that you pay for that call spread, the bullish. And then the risk reverses. So whatever risk you had, it becomes your reward with call spread. Whatever reward you had with put spread becomes call spread. I think it's easier to show you, but that's how the market makers price all these things. So, but the simple answer would be, if you think volatility expands, do the debit. If volatility collapses, do the credit. And but I will be curious Saturday to see how your spread went, so you can share with us.
Okay.
All right. Thanks, Ida. All right. I wasn't supposed to talk. Okay, never mind. Go ahead. All right, guys. Share some of the good trades that you've had, or you'd like to talk about some of your, experiences that would benefit us.
I mean, I have a few questions, if I may.
Sure.
So I've been working on the time, basically daily and weekly, and the question that I had was, first of all, when you're looking at a weekly chart, how do you select the moving average? So on the daily, you're doing 200-day, 50-day, 21-day, or something like that. On the weekly, would it still be 200 as well, or is it different? Is it 52 because it's 52 weeks in a year? That type of thing.
Sure. So on the weekly, basically, if it's 20 weeks, becomes a 100-day moving average in a sense. So if you did weekly, you can use the 20 and 50 and 200. 200 obviously is a very long term. Sometimes we use 65 weeks. That would be another number. And all these, Jean-Claude, just remember, these are like a kind of self-fulfilling prophecy. I've used it any moving average. You can use 7.5. I don't know. You can use, some people use 78 because like we do on intraday, I use 78 minute because if you divide it 360 by 78 and in perfect world is 6.5 hours. So 390 by 70 is like it becomes like, let's see. Here we go. It's like 6.5 hours. It becomes like 5 bars, or to be exact, 390 minutes. So sometimes we use 78. The reason we use that 50 and 200 is, and it's on the daily, but you can apply it to the weekly. I do use like 50 weekly, and
Okay.
I use 100. But the daily is the most important because the fund managers, they have, and the algos, they look at that 50 and 200. It's part of their program. So that's what I just said. It's like it's a smoothing, but if your favorite number is 29, use 29. If it is 18, use 18. So it's not actually the number. It just makes it simpler visually to see what's going on. So there is no hard answer as far as, but I do use 20, 50, and 200 and something 65 for weekly. So,
okay.
Yeah.
And then when you're looking at a weekly graph, do you wait till Friday to actually look at it? Because the beginning of the week, the candle hasn't really formed yet.
That's a very good question also. Yes. So, I mean, the official, obviously you want to wait till Friday, but during the week, you also get a feel. So I do look at the weekly. For instance, today, like the NASDAQ, I'm looking at this big move is happening, right? So I looked at the daily. We are bouncing off the 100-day moving average. We broke above the 18-day. Then I want to go look at weekly and see, based on weekly, do I have any resistance at this point that we are in?
Yeah.
So if there is a resistance during the weekly, then that gives me a little the cautious light that, hey, just watch that because other people are watching it. So if so yes, I mean, officially you have to wait till the end of the week, but if it's Tuesday, it's already has gone and hitting a resistance or the support, that gives me a little again hesitation if it's like a resistance, or a little help if it's like support. So yeah, so you can, but officially it will be end of the week. So
and when you're doing, let's say, covered calls or options, and you're selling them short, so you're playing the theta, so you want shorter time frames, so you would do 30 days. You were saying 30-day options. When you're looking at the charts, let's say you know that's at the top of the channel or the top of a Bollinger Band. Since it's a 30-day options, are you looking at the weekly charts?
No, I do. Again, you do the daily. You want to do the weekly it's like too far. So you have to, that's another good class just for covered calls. You want to have the selection of your covered call. You want to have it stock that it's not too volatile. It's not too exciting. You want to have a pattern. Trending stocks are really good. If it's like the channeling stocks, you want to avoid the downturn. So you want to have either channeling, you want to have a little up slope, you want to have less volatile stocks, maybe some
I can pull it up and into fire.
And basically what you want to do is something that some good indication, and it's stock that you already know very well about it. So I would recommend, first of all, I do monthly. I would recommend to covered call monthly, and do it like if it's today, I would do like December. So like do it December 40 days from now, 48 days from now, and then roll it. So every month the whole idea is you're collecting the rent. And it's almost like, again, like a casino, right? So this is a consistent money producing strategy that if it went and hit your target and you were exercised, then you're not concerned, because if it's like 20%, 15% above where you are, that call, you still made 15% plus you collected the premium. But I do not look at you can have that weekly again because of like a resistance, you know what the boundaries, but I look at definitely the daily. I look at the channels, the Bollinger Bands, the moving averages as a maybe resistance. But also you can just use a money management decision. You say, you know what, I'm looking at this call option. Let's just use Apple. And Apple has been like between 100 and 140, or I go and find, you know, the delta is pretty low. You want to go under like 30, like 25 delta, and then and say, you know, I'm collecting $1 or $2. That's a pretty good, you know, if I'm doing covered call on Apple, I own it. I have 200 shares. You know, it's not a bad. I can sell 2 covered calls. If it goes to 125, I collect, you know, I have my premium plus it went from 100, well, it was 110 earlier, but let's say it's 114, 125, so be it. I made $11 on that, on top of that. So, but I don't look at weekly that much with covered calls. And I'd rather you do it every month, just roll it and just keep doing the same thing. Right. 10 times a year, probably.
But then when you're looking at the Bollinger Bands on the daily and it's hitting the upper band, you think, okay, it's not going to go further. But because you're looking at it on a daily basis, it's not like you can forecast over a month that this is the top. You have to look at the entire graph, like the chart, obviously.
That's true. So you look at the full, again, the reason you look at Bollinger Band is more of a volatility side of things. So that's what I do. But also, that's another thing, like you can look at the expected move. Let's say right now, I look at the December 18th, expected move on December 15th, or I think the 15th or 18th, expected move on Apple. And that's my boundaries. So if I think Apple is going to go one standard deviation is $15, then I go $16. I mean, something like that. So that's how you can do rather than just watching the Bollinger Band. So you can just use the standard deviation on option thing.
Okay.
Yeah.
All right. Thank you, Ramin.
You're welcome. Any comments? Anyone likes to share? Again, I'd rather listen from.
Ramin, sorry. I guess I can follow up because I'm actually doing covered calls now.
Yes.
And I sell covered calls on every, you know, I have a few companies that have lots of 100 shares, so I sell covered calls on them.
Mm-hmm.
I wish I had known about it earlier when I started this. I'm still learning. You know, as I told you, I had some shares from a company I used to work for.
Right.
And I ended up selling all of them. I made pretty good money on it, but I could have just collected rent on it, as you were saying. My question is, so you recommend rolling it? So when you roll it,
No, I didn't mean roll it. No, but you collect. What I meant, maybe that was right. I'm saying if it December comes and you collect it, then because you have it, it's covered call. Let's say you're using all your shares. If it's Friday, Monday morning, go to your January now. That's what I meant.
So you roll it all on the day.
No, you just collect. I mean, I just start a new position. Let's put it that way.
Okay, so just close it and then open a new position.
Yeah, it's automatically will be closed. So you got collect. Your hope is that it's just going to expire worthless, right? So you collect every penny out of it. And if it gets exercised, then well, you have it to cover it. So, but one of the good things about covered call is sometimes I use Exxon. Exxon had nice dividends, but a lot of people owned Exxon from very low bases. And nowadays Exxon is, it's like, it has depreciated so much, but that was one of the favorite ones. People used to play covered calls on it, and they had a very large capital gain base, so they just didn't want to sell it. So what they would do they knew it's going to go down. So they would look at it in the short term, it's going to go down, but in the long term, they felt it's still positive. They love to have that share. So that's what they would do with covered calls, and they just collect that. So sometimes it's a more of a tax planning idea as well, that, you know, maybe you've had it for so many years and you just don't want to, you know,
Yeah.
leave it. So that's one of the ways.
Right.
That's what covered calls are very attractive. And they call it, again, it's like the casinos collecting 5-6%. They're very happy because they call options have a little bad reputation because of a lot of people look at it as a gambling. They come in and they think, oh, they're going to put $1 and they're going to make it 2 or 3. But you have so many different strategies, which is professionals. That's what basically they use. It's more of an income producing vehicle and risk reduction vehicle rather than, you know, home runs. You know, you constantly want to make a, you know, double or triple, but it's a single hit basically, as a, you know, baseball analogy. So, but it is a wonderful. And the other good thing is, I've said it before, covered call, you can do it in your retirement account, in your IRAs. You don't know where to buy, you know, you're sitting in cash, you're concerned about future, and maybe there's a stock that you really like to buy and you think it's a good value and you want to hold it for 3 or 4 years. Well, find a few of those stocks, put in your IRA and just do covered calls. And in the meantime, it will beat, most likely it will definitely beat the dividend payments. And and you just have to have your strategy in place. Just do it. So
yeah, I definitely like it. And I see it also as kind of a hedge when the market, you know, doesn't go your way.
Yeah.
You know, it was nice, you know, last week when my stocks were losing money and I see my covered calls are all going up.
I know you're rooting.
Makes you feel good, huh?
You're rooting for it. You said, "Oh, please go down for the next 2 weeks, and
right,
then come back up." Right? It's yeah. And
I do have a question about. I asked you about this covered call I have before. So the company is Tootsie Roll.
Right. I looked at
you
it.
know, I figured it's a candy company. They pay dividend, and the Bollinger Band look very, you know, there's not a lot of volatility. It's very flat usually. But over time, it's been going down a bit, and my covered calls are not behaving the way I expected to. As the stock goes down, I'm actually losing money on the covered call.
Yeah, I couldn't understand that part. So it is you have sold it, right? So
right.
The Tootsie Roll had been in a downtrend. So
and
one thing you want to make sure, again, maybe you should do a class, it's the selection of your covered call. You really want to have a pretty liquid, good stocks, low spread, and they pay juicy premium. You want to have some kind of, you know, if you're going to go to take, I mean, delta of 25 or so, you want to at least collect premium that it is, you know, worthwhile. So I would recommend, make sure you do something that is pretty liquid. And also, again, the stocks that you hold is something that you did a fundamental analysis and you think these are worthwhile holding it. Just don't buy it because of, you know, there's a chance. So that's why I mentioned you want to do like channeling or upward trending, something that has a good potential to go up and take advantage of that. So.
And I've noticed the bid and ask for the option itself. The bid is at 0.
Well, yeah. So the bid and ask, if it's like a big spread, yes. So it's
and the ask is $1. So
that's really. I'm sorry, that's not very good because that's the liquidity. So you want to have a high volume, high interest, because your job is to have narrow, you want to pay as little as possible and receive as much as possible. So that's what I suggest. Again, have really liquid stocks. You could even do, you know, indexes if you want, you know, spiders, IWM, but the stocks are more favored because you can do actual fundamental analysis and you'd like to there's something that you know that somebody doesn't know, maybe that's an advantage. You want to hold the stock, but also collect rent on it. So, yeah.
Okay.
All right.
Hey, Ramin.
Yes.
If I could follow that Henry's
Yes.
covered call strategy. Okay. You know, I have some long stocks that I owned for a while that's, of course, making money, and I don't want to lose it.
That's right. Yeah.
And when you do covered call, even you look at the chart, sometimes it just goes crazy for, like, I don't know, sentiment, earnings, or whatnot. And is it, for me, what's the better way of rolling it out further out of the money? Is it like, for example, if it's it hit your strike price, do you roll at, do you sell another call at that price for further out, or do you choose higher strike price and further out?
Good
What's more
question.
advantageous?
Yeah, so it's the question of, again, the probability, and also I look at, again, the how much premium are you collecting? So if it's getting close where you are, you can, obviously you will lose. It's all, you know, you have to make that decision. Where is your comfort zone? So I'd use an app like Apple, right? So if it's Apple, is you'll be happy to make a short-term gain on it, and it's at 125, and you bought it at 110. That's $15 plus whatever premium. If you're a trader, that will be attractive. If you're an investor and you're gonna hold on because of the valuation that you've had, I use one example like today. You know, Biogen went crazy.
Oh my God,
And
180.
you had covered call on Biogen, and that's one good lesson for every one of you is, you know, biotech stocks are, you know, they are not a good way of covered call, because that's what the volatility plays a role. That's what I mentioned. You want to have, you try to have some boring stocks if you want to cover call, and something like Tesla is not a good, or Netflix is not.
Or in Facebook just went crazy today. I almost rolled it out yesterday or last week. I go, oh no, I don't want to go that. And suddenly today, it's just like.
Well, today was on, again, it was more of a markets really dictated, besides Biogen. But so you really have to watch the markets, again, the timing of it, as you know, this was election, and so you should be pretty selective about what's going on. And that's what we do. You know, we want to make sure we look at the big picture and want to make sure we're in the right sector and right stock. But I wouldn't hesitate, either, again, depending on, you can roll it, of course, you can make it higher and just collect that. If you're happy with that, you can roll it higher, the same strike month, and roll it high, or you can roll it over to the next and collect more premium if you want. It seems like the stock that you're in, your decision was to hold on to that stock as long as possible. It seems.
Yeah, because I only have one.
Just, you know, if I'm going to get 20% return, I'm happy. Then, you know, and then I go and hope that it's going to drop again and I can play this game all over again. Or again, I go out of money so much. So again, if it's one standard deviation, maybe I go a little more than that, thinking that, you know, for the next 60 days or 45 days, whatever, you know, 30 days, I mean, it's not going to hit. Then that's what I'm going to, you know, I'm going to sell. That's a cover call. But
I just bought back Apple that I did for next year, because it, I go, oh, but if I could make 50% of what I should have received, I will, you know. So I just bought it back, and then I'll wait for it to go up again.
Right.
Do like a longer.
One thing I would recommend about cover calls, because it is, again, conservative, find some of the stocks that you feel, you know, familiar with. You have 1,000, choose 5 or 6. The behavior, you are familiar with the behavior, and just play that. That's, again, as if like you own 5 casinos and each one is giving you 5 or 6%. And just be really good at understanding the technical side of it, understand the fundamental. These are the stock that you wouldn't mind holding for a long time. On the other hand, if you're short term, as I mentioned, if I'm playing Apple, if I'm gonna make it 20% on it in this combination, if my Apple goes to 125, 130, what was my objective? My objective was making money. So I'm happy to just get exercise. So what? I bought 110, go to 125. I can go find another alternative to something else. So one thing I've mentioned, I don't get married to my positions. If I do, that's my investments. And again, that's why I would recommend, if you have retirement accounts, this is very attractive, because you don't have to worry about capital gains, you don't have to worry about tax consequences for now. So that's a good one. You still have a long-term hold and you're playing with in the market. So yeah.
Ramin, can I just follow up there, because
I
started doing covered calls, and obviously I'm more of a trader than an investor, and my position is, if I can make 7 to 10% a month on a covered call, I'm fine. But if I get exercise and I make 20%, I'm fine also. So my plan, Ida, and Apple would be a good example, would be just to keep on setting the strike level at a point where I'd make 20 points. And then if I made 20 points, I would just go, okay, great, I made 20 points. And then I would look for another stock to do the same with, like, Freeport McMoran, American Airlines, Delta, any other company. So I plan to have a list of 30 stocks that once my covered call in Apple has been exercised, and I move on to another stock and just do a whole rinse repeat. And that way, monthly, you're guaranteed somewhere between 7 to 10% income. And if you get exercised, you make 20%. So it's almost a win-win. I know I spoke to you about it, Ramin. It almost seems too good to be true. Having said that, the stock could go down terribly, and then it's not the perfect thing. So, but
exactly, yeah, you're reducing your base, and nothing is 100%, but it is a good way. That's what they allow you, because it's such a conservative way. That's what they say. It's level 1 in option. When you play options, it's level 1. So they encourage you to have covered call first. So, and then once you learn covered call, and that's what the verticals come into picture, because they take a place of the stock with another option, and that becomes attractive too. You can do verticals as well. But this is I think it's a good strategy. The only setback I have to say is, if you have a small account, unfortunately, it doesn't give you, if you're talking about $100, I'm just using simplicity, $100 stock like Apple, then you can only do one call, right? So it's not a money-making machine. But if you have a larger account and you want to do a portion of that, it's fantastic. I think you can put 20% of your account in just, this is my covered call, this is my income producing side. And as I mentioned, if a lot of people have large retirement accounts, and they're probably all in funds, so you basically follow the market, maybe a portion of that, this would be a good income producing, and also keeps you on your toes. It's exciting, and also you don't have to watch it every day. Like Martin, you said, if it goes up 20%, it won't hurt me to make 20% on my holding. And if it doesn't, I collect my premium. Well, and I did my study, and I think this stock is a good stock for long term. So be it. So, there's nothing wrong with making 20% in 2 or 3 weeks, and you can find another one. So, yeah, I think it's a good strategy. Okay.
Can I share one more thing that just happened to me before election?
Please.
I remember one of your strategies for collecting income is selling puts that would expire worthless. And that was my intention. However, the strike price gapped, and it was assigned to me like so far away, and it never happened to me in my entire trading life.
Wow.
Like a short put, it was expiring in November 20th, and it's so out of the money. It's not even, it's if the strike price is $20, it's like they exercise it and the stock is still, like below $20, the equity price at the moment, for example. And I called Schwab, and they said they could do that if the, I guess the broker of the seller allows it, but never happened to me. That left me not sleeping. I lost sleep over that because I was trying to think, what if it was a big equity, like if I had Tesla or whatever, that I was playing naked put to sell naked put at a certain strike price. And I was so surprised it was exercised before the expiration, and also not even the price I want to sell it to.
Thank you. That's a great, thank you for sharing that, because that's so important. Remember, in the United States, we do the American style or American options. So in Europe, you cannot exercise till expiration, right? So in the United States, it doesn't happen often, but unfortunately you have the other party can exercise it anytime.
Yes,
and that's a rude awakening. And that's one of the reasons, if you have noticed, I like to cover my, and I've said, if you have especially naked puts, especially, or naked calls or naked puts, on Friday, I like to do it before Friday, because even up to 1:30 in the afternoon, the broker has the right, the other party can exercise, even though it's 1 o'clock, they can do it up to 1:30. And I don't like to have those surprises. And that's, unfortunately, you witness, it doesn't happen often, but it is the right. Remember, the party doesn't have the obligation, has the right to anytime they want to exercise. And that's another reason, I think, Ida, that especially the times that we are in, doing like vertical spreads become even more important. And you can go large spread, but this way you really, there's two things. You're protecting yourself, but also your margins are much lower. Your capital is not, when it's naked, even though it's like $20, still it's money that you could have really done 1/10 of it. So that's why these vertical spreads are attractive.
So I just saw the covered call.
Yeah, can I ask Ida, what is the ticker of your assign?
Oh, this one?
Yeah.
It was Juniper.
Oh, okay. How do you spell that?
JNPR.
JNPR, okay.
JN. Jack, Nancy, Paul, Robert.
Oh, JNPR, okay.
Great.
The stuff, yeah.
I see. Oh, it's earning coming, right?
No, it's already over. October 28th, and what's odd, this happened on Tuesday evening, like you're in bed kind of thing, and then you had an email that it was exercised, and it really threw me off, because that never happened to me, ever. And the other thing too that I would like to share that happened to me last week, like I had another one that was, I did not close it because I thought it's going to expire worthless. But they assigned it to me because it's close like 2 cents or something like that. So, lesson learned.
Yeah, so it's
learning different things.
Either that if an option is in the money by 1 penny, the rule is 1 penny.
Oh, 1 penny.
You are in the money, so they have the right to do that too.
Okay.
And that's
which I was okay with it, because I could just do the covered call. It made my decision faster.
Oh, yeah, exactly. It worked out that way sometimes. No, I'm glad. But yes, that's what, again, I am pretty cautious. I don't want any surprises. So that's what I rather just cover my positions before they expire. So
I've learned so much from your explanation, because it happens in real life for me.
Yes. Yes. It only takes 1 or 2 to.
Well, that one, the assignment, like so far of the, that was really, I mean, even Schwab guy was not really sure what to tell me, because they said that's very, very unusual.
Yes. Yes, very rarely they do that. But again, they have the right.
Glad to share it with you guys.
Thank you so much, Ida. That's very important. Thank you.
I mean, if people don't mind, while we're on that subject, I'd just like to share somewhere along your lines as well, Ida. So I did, I should say now, I did used to sell a lot of naked calls and puts, and either I was very, very lucky, or I was or good, or knew what I was doing. and it was working out relatively well for me. But when it turns against you, it is the worst feeling in the world. You cannot sleep, and you end up owing a horrendous amount of money, and B, as Ramin mentioned, it takes up so much of your margin, your account. So I've the last 2 or 3 weeks, I've stopped doing that, and I've converted to doing vertical calls now, which actually, for me personally, now that I've had the bad experience of the naked call and put going the wrong way, I realize now doing vertical spreads is probably a much better way to go, because it's not as sexy and not as exciting, but it's a whole lot more stable and predictable. So I've sort of it's the last 6 months, for the people that might know my background, I've been doing this, and it's very much like I learn like a child by putting my hand on the stove, and I go, oh, it's hot. So I learned that, like, you know, even though I had some success with naked calls and puts, it was probably more luck than skill. And now I've learned to do cover. You know, I'm focusing more on you know, the verticals and the covered calls, because, you know, that they're not, I wouldn't say they're exciting or sexy, but they're a much easier way to generate.
Well, your success probability of success is higher. Frankly, Martin, that's the only ever in my, I don't know how many years of trading. I mean, like you said, I'm also very lucky with naked puts, and the only reason I do that is something I want to own at a certain level, certain price. But this was the first one that was assigned to me unexpectedly.
Yeah.
Frankly, all my naked puts are also expired worthless. I mean, I don't keep them. It's like my trading kind of thing, not my like kind of more like an income producing strategy. But I do a lot of bull put spread and other spreads and covered call.
What do you normally do? So when you a naked put, and you probably do it like I do, you know, very well at the money, but on the rare occasion whereby it turns against you and the stock is getting to the strike price or below that, and you now owe a lot of money, when do you bail out?
Sometimes if I'm not ready to own it, like I was telling Ramin a week ago or so, I just roll it out or roll down, or for example, a different strike price. Like I have one in, I'm very conservative. I only take 1 or 2 option, you know, contracts, because I have a lot, but it's more conservative approach, because I have also stocks that I do for covered calls that I had for a long time. Like I had the Apples, and I wish my Apple is in my IRA account, because now I have to be careful with, you know, with what I make on the other side, because it's going to be taxable. Correct. And it's almost like the government will just take your profit.
Yeah, I think I did some strangle. I shorted, and luckily I didn't got a sign. I can share with you know, us, our team, to say what I did. Maybe you guys can give me some suggestions,
I'd like to hear.
Advice. Let me share my screen with you guys. Just hold on.
I haven't done strangle.
Can you see my screen?
Yeah.
Okay, so basically this is Microsoft, which you know, I like it very much. I like it because I basically calculated the beta, that is this stock, how it moves with the whole market to the QQQ. And Microsoft is among the frontmen. It's the only stock that has a, you know, a positive side has a large beta, and negative side has a smaller beta. That basically means when the market moves up, it moves more, and when it moves down, it moves less. For, you know, the past, I think I did it 5 years. So I really like to play with it. I think also fundamentally, it has the cloud service. It's always be innovative and has all the new development to catch up, you know, all the SaaS and other new trends. And also it's Office. Although, you know, I have been using Office for, you know, my whole life, I feel like. I think it's outdated, but nothing can replace it. And now the Office is in subscription basis. So it provides a very good cash flow for Microsoft. So I like to play Microsoft a lot. So, but
Beautiful
basically, I look at this chart this way by, looking at the daily chart. I can draw a box from here to here. If you can, come with me, you can say most of the time back from, late of June until now, the Microsoft price always moved within this box. It came out and then dropped down. It came out a little bit, dropped down, but that's a obvious resistance line here, and that's a very strong support at about 200. So when previously the market goes down, I saw the strangle here, right here at around 211. And of course, because you have a very strong supporting at 200, I'd rather be, more safe. I sold a put at 195. And then you have the highest point at 231, and I sold a call at 232. So in that sense, basically, I'm pretty safe. I'm in the middle. And I don't think, in a downtrend, it can suddenly, before the election, it can turn around and, get a new high. That's highly impossible. A very low probability. And I don't expect it can directly go down. I think at least it can, be here, maybe it zigzag for a little bit and then go down. It gave me enough time to get out of my position. And plus, as I mentioned, I like Microsoft stock so much. If it really goes down below 195, I think actually it's a very good opportunity. I can just hold the stock. I can just, get the stock, get myself assigned. I'm afraid that guy may not assign it to me because it's such a good price. So I did it here, and then I just exit today. I exit today because firstly, it went back right, above what I, approximately around what I get entered the position, but after a week. So I'm still in the middle of my strangle that gave me the maximum profit. And also because it went down so much to the extreme and then it pops up, the volatility actually has a crash. So the options become really cheap. And the third reason is because now it's at this box resistance level. I really don't know whether it can break up or it can, turn around and go down. The election still has some uncertainties. I don't know. So I'd rather just take profit here and then wait for the market to find its direction in the next few days. And then I can start another round of trading again. So basically, if you can say, this is what I did. At this point, I sold to open 195 put for 284, sold to open 232.5 call for 210. And today I just closed both sides for about 200. So I have about, that is about 495, it's around 500. So I basically have about 300 profit, a little bit less than 300 profit. I think it's a good trade. I just want to share with you. So, nice. I know you guys trade options a lot. I know you have your own experience. So give me any, suggestions, advice, or, discussion. I'll be really happy to hear. Thank you.
Can I, that's wonderful, actually, like seeing it like this. Yeah. So that's, you put forward again the fundamental reasons, and then we look at the technical, and then you are using strangle. So one thing is, so I'd like to build on that, because I do, like with Apple, right? I do 140 and 100 with Apple. I do the strangle. The only, obviously, not the dangerous part, but the thing is now you're tying in large capital. You have to, unless you have like level 4, they only require 20%. so basically what you built, if somebody doesn't have the large capital and also wants to protect, now what they could have done, come and buy, so you sold the strangle, buy a wider wing. So maybe out of money, it was like one, like you have the 130, 195, you can buy the 190 put, like a, again, vertical spread, and then go buy 235 and 37 and a half call. And so you have the larger, the bands. So basically you have two vertical spreads, or you're selling the middle strangle, buying a outer strangle to protect yourself, which is actually iron condor. So that's what iron condor is. So we talked about it, 2 weeks ago, how attractive it becomes. And this is a wonderful example. And yet you will only need like maybe 1/10 of the margin that you're using. And obviously the profit is not as much because you're paying for the other wings. So, but this is a great way of, like, the way you approached it, that's the fundamental way of doing. You come up with your idea, with the theory, and for everything that you have, there's a strategy for it. So you decided to do the strangle. If somebody, let's say I have a small account, I have a $10,000 account, I really love your idea. I think this is such a great thing, but I don't have $45,000, $50,000 to, for the one strangle. Then I can do the iron condor, protect myself. You made $300, I might make $100 or $150, but I could have done maybe 2 iron condors. So for the same amount of risk, I might have done 5 or 10. So, but the way you approached it, that's the way it should be. You start with the idea, you start with the, your objectives. You already absolutely know what is, the risks. The risks are come first. The risk criteria, you'd use that, and then we can protect it if we wanted to with the, again, the buying and the strangle, and basically making that iron condor. And that's what it is. So that's a great example, Sean. Thank you so much. And I like Microsoft too. So
Ramin, can I ask Sean a couple of questions?
Sure.
Hey, Sean. I love that, because I used to sell strangles as well, and now I've got all nervous. Now I make them iron condors. So, did you have a plan as far as selling? If Microsoft went, although it was highly unlikely, got close to either the top end of the call or the bottom end of the put?
Well, sure, yeah. As I said, I don't mind to own Microsoft. I actually like this stock very much. I have determined if it goes down 195, I would have it. Because if within, I sold for November 20th, if within this short period it went down, I think it's a good opportunity. It will bounce back.
Okay. Hey, Sean, so let me ask my other question. So if it got close to the, where you sold the call, whereby at that point you would probably be in the negative, did you have a plan? If it, because I would have done the same thing. If it reached the put level, I would have just been exercised and taken the shares, because at 195 it's a good price. But if it had gone the other way against you, did you have a limit set? Said, okay, as soon as it gets really, really close to call, I'm going to sell, or what was your strategy for if it got close to the call at the call level?
Well, my plan was if just in case that trend, which I believe at that time is going down. If that trend turns away and it goes up, I might turn that into a spread instead of a naked call.
Okay.
In that way, I have limited loss, and I can have profit from
profit down there.
Put side. Yeah.
Mm-hmm.
Very good.
Sean, I have a quick question for you too.
Mm-hmm.
You mentioned about the beta of the stock, and you mentioned how you had a different beta for when it goes up and when it goes down. Is this something you calculated yourself, or were you able to find this information somewhere?
Oh, it's what I calculated myself. I can just download the daily stock data from Yahoo Finance, And then I find out the up days and down days. I just calculate when the up days, what's the beta of Microsoft to the index, what's the down days beta.
Got it.
Hey, Sean, sorry, one more question, because I'm really interested in this trade. Was it was this something you you put on a like, it was like a monthly, or it was a monthly option and you just sold it after 2 weeks?
Oh yes, it's a monthly. Yes, I basically sold till November 20th, but I think now it's a good time to take the profit. If you know the market finds its way, I can get into another position.
Yeah.
Sean, can I make a comment? And again, this is wonderful, because sometimes we want to squeeze every penny out, and here you made about 60%, and I mean, there's nothing wrong with that, and it could have been 70 or 75, but you know, there's nothing wrong with 50 and 60%. That was your objective anyway, so you probably, when you did your strategy, you said, you know what, this is, you know, basically looking at the technical side, and you're explaining the up channel, up at the top of edge of the channel. But also, I mean, it's wonderful. We don't have to wait another a week or 2 weeks before November, you know, expiration, and thinking that, oh, I can make 90% or 100%. They say opportunity cost, right? So you have another 10 days, you could do something else with that money and free your capital and to do it again. So that's very good that you knew, you know, you said, well, this is, again, it's a trading plan. This is the business plan. And also you relieve emotional hang up with the elections and all that. If there's uncertainty here, you're done with. And there's nothing wrong, again, with having a 50, 60% in your pocket. And
Ramin, can I just chime in there as well? Because this is the one thing that I've learned in my last 6 months is you can buy anything, anytime. Any fool can buy something. I think the real skill is knowing when to sell. And I was one of those people, you know, trying to hang out for the last, like, you know, the last like 5%. You know, if I made 92%, I'd want to make 100. But what I really like about this thing Sean's done here is, like, he's gone, okay, I've made 60%, and now I just live to fight another day and buy another option. Whereas my old self, I would have been holding on this all, you know, all the way out to make the extra, like, you know, 30%. So I think it's really important that, like, you know, I used to have this notion, don't leave any money on the table. And now I realize, you know, it's okay to leave money on the table, because you can use that capital to go somewhere else. So I think one of the real arts in, you know, in dealing in options is actually knowing when to sell them, because, you know, anyone can buy an option, but knowing when to let it go is, like, really important.
Absolutely. Yeah, totally. Money management is more important than actually even technical or strategies. So managing emotional side we've talked about, and then you can apply your strategy. Yeah, wonderful. So by the way, I will be, I have to leave about 3 or 4 minutes. If you like, we can, Sean, if you don't mind, if everyone wants to stay, maybe we can continue. You can record it since you're the host. So do we have other questions? If not, we can stop. But if you do, please don't hesitate. And I hope, do you like this forum? Is this something you'd like to, maybe once a month we should do this? Is that something, any comments on that before I leave?
Yeah, I mean, I think
like
it's
it.
great.
Yeah, you can go first.
I appreciate it. Yeah, because we got I mean, this is a great community. I keep telling everyone, as you've noticed, we haven't expanded. We don't accept, nobody knows, you know, about our group, really. It's ours. So you're like I always say, you're my board of directors. So you are the founding fathers, as they say, so, or mothers. Basically, this is it. So I think we are learning more and more with just such a lot of good ideas to share with. So yeah, I think that would be good. Every month, maybe we can just do one informal and then build on that. So next week, I think will be good. Hopefully we know everything about elections. and based on that, we can come up with our new class based on what it will work for next 2 months, and for the, come up with a strategy which help us to make money, because this is, I said before, this is my favorite time of the year. This is where I think next 2 months, it will be very exciting times to, to be profitable. So, Sean, do you think, first of all, would you like to stay? Would you like to have more interaction, or should we, as far
Me
as
personally, I have to go, but I heard that Arizona was just won by Biden. I just want to share that with you from one of my friends tracking the election. So,
yeah, it was good last night, but they're objecting to it. So, but yeah, so it's been since last night, but nothing has been concluded. But yeah, it's going to be interesting two days. I think a lot of lawyers are going to make good money. I think if they had a stock, I think that would be a good place to buy options on them. Will be good options on attorneys. But anyway, so if that is the case, maybe Sean, if nobody has any other comments.
I just have one comment. I wanted to thank you, Sean, for sharing your trade. I think it was very insightful, and I think I like that format a lot, because we can all learn from the way we set up our trades and get feedback from one another. Because sometimes when we're doing it, we're like hoping we're doing the right thing, but you never know unless you get the feedback.
yeah, next month,
thank you. I'm going to share my silver trade, and it'll be the exact opposite thing where I did everything wrong.
I think sharing is really the best way to learn. I mean,
Yeah, I really enjoy sharing, and I really appreciate, our group is so wonderful. I always want to learn a lot from you guys too. So next time, I'll sit here, watch your trades.
Great, Sean. Thank you so much. Thanks, everyone.
Thanks, everyone. Have a good evening.
Yeah, we have the recording, and then hopefully we can do this next month. So have a wonderful evening.
Saturday. Take care.
Bye.
Bye-bye.
Thank you.
Bye.
Au revoir.
Bye.